The Auditor-General provides assurance to Parliament on the accountability and performance of the Victorian public sector. The Auditor-General conducts financial audits and performance audits and reports on the results of these audits to Parliament. On the 10th of December 2015, the Auditor-General tabled his financial audit report, Water Entities 2014-15 Audit Snapshot. The key messages for noting from this audit are: qualified audit reports were issued on the financial and performance reports of the 4 metropolitan water entities. Internal control weaknesses were not resolved in a timely manner. The financial performance of the water sector has shown improvement, but short-term and longer-term financial sustainability risks exist. And the water sector has significant and growing debt, as the water entities rely on debt to finance capital projects and other payments such as dividends. The 19 water entities are required to prepare their financial reports in accordance with the Financial Management Act 1994 and the Australian Accounting Standards. Unqualified audit opinions were issued on the financial reports of 15 entities for 2014-15. Qualified audit opinions were issued in relation to the 4 metropolitan water entities due to errors with the fair valuation of their infrastructure assets. The errors overstated the value of infrastructure assets and asset re-evaluation reserves by a combined $1.3 billion. The errors are a departure from Australian Accounting Standard AASB 13 Fair Value Measurement, which became effective from 1 July 2013. Effective internal controls are critical for the delivery of reliable, accurate and timely internal and external financial reports. Whilst the internal controls, to the extent we tested those controls, were considered adequate for financial reporting purposes, we identified a number of instances where important internal controls could be strengthened. 17 extreme and high-risk issues were reported to the governing body and management for action, in addition to a further 54 medium-risk issues. The issues predominantly related to 3 areas: information technology, i.e. IT security and user access, logging and patch management; infrastructure assets, property, plant and equipment; and revenue billing systems. We also noted that 18 issues, or 33% of prior period high and medium risk issues, remain unresolved, indicating internal control frameworks are not as effective as they should be. The financial performance of the water sector has shown improvement. For the year ended 30 June 2015, the 19 water entities generated a combined net profit before tax of $430.6 million, an increase of $109.7 million, or 34%. The 4 metropolitan water entities generated $399 million, or 93% of the sector's net profit before tax. We also noted that 15 entities reported a growth in their net profit before tax, and that only 4 entities reported a net loss, compared to 6 in the prior year. Dividends paid by the 4 metropolitan water entities totalled $126.1 million in 2014-15, an increase of 215% on the prior year. To be financially sustainable, entities need the capacity to meet current and future expenditure as it falls due. Financial sustainability should be viewed from both a short-term and long-term perspective. We considered 7 indicators over a 5-year period: net result, interest cover, liquidity, internal financing, capital replacement, debt to assets, and debt service cover. The short-term indicators highlight liquidity risk as an issue for the metropolitan and regional urban water entities due to the quantum of their short-term debt. The longer-term financial sustainability risks relate to the water entity's ability to generate sufficient cash flows to finance the replacement or renewal of assets and repay debt. Further comment on this matter will be made under Trends in Debt Management. The 19 water entities were required to include an audited performance report in their annual report for 2014-15. The performance report contains predetermined financial and non-financial indicators and targets, actual results achieved, and explanations of significant variances in performance between the targets and prior year performance. 15 clear audit opinions were issued for the year ended 30 June 2015. Qualified audit opinions were issued on the 4 metropolitan water entities' performance reports, as errors with the valuation of infrastructure assets, as mentioned earlier, impacted the calculation of 3 financial performance indicators. Consistent with our observation in the prior year, the processes surrounding the preparation of performance reports are not as mature as those applied to financial reporting. We have analysed trends in debt management over the past 5 years and note the water sector has increased their level of borrowings by 29%, $10.4 billion in 2014-15 compared to $8 billion in 2010-11. The 4 metropolitan water entities account for 80% of the water sector's total debt. The water sector's borrowings, in turn, account for 25% of the state's overall debt. And the water sector's borrowings are forecast to increase by a further 19% by 2018-19. Total debt to reach $12.4 billion by 30 June 2019. There has been and continues to be a reliance on debt by the water sector to finance capital projects and other obligations such as dividends. Of the $3.7 billion of maturing debt during the 5-year period, $2.7 billion was not repaid, it was rolled over. 8 entities across the sector did not repay any debt over the period. Accordingly, it is recommended that water entities develop a dedicated debt management plan or strategy to map out their approach to debt and its use over the medium and longer term. At present, only 3 entities have a formal debt management plan or strategy. Whilst the water entities have maintained an adequate level of interest cover to service their debt, longer-term financial risk exists for the state if the primary source of funding capital projects is derived from debt which is rolled over and not repaid. The report contains 5 recommendations, 3 directed towards all water entities, 1 specific to the metropolitan water entities, and 1 for the Department of Environment, Land, Water and Planning to action. The Department accepted all recommendations. The recommendations are 1. That water entities address issues raised in audit management letters on a timely basis so that any weaknesses in their control environment are rectified promptly. 2. That metropolitan water entities change their current valuation model used to estimate the fair value of infrastructure assets to correct the errors identified by audit in the qualification. 3. That water entities enhance their performance reporting processes in regard to roles and responsibilities, data collection, quality assurance and report preparation, and critically assess the requirements of Ministerial Reporting Direction, or MRD, 01, performance reporting, to ensure its appropriate application in preparing their performance reports. Number 4. That the Department of Environment, Land, Water and Planning conducts a more robust review of water entities' draft corporate plans to detect any disparities with MRD01 and undertakes a comprehensive review of MRD01 non-financial key performance indicators for consistency. Number 5. That water entities establish a dedicated debt management strategy or plan that maps out their approach to debt management and usage over the medium and longer term. All our reports are available on our website. If you have any questions about this or other reports, or if you have anything else you would like to discuss with us, including ideas for future audit topics, please call us on 03 8601 7000 or contact us via our website.